African Dialogues. So let me just introduce you once again to our panel of guests. We've got Ofurio Kuma. He's the Managing Director of the ARM Infrastructure Fund. We've got Wale Shonebare, Managing Director for UBA Capital. Andrew Ali, Vice President and Chief Executive Officer for Africa Finance Corporation. And then Ronald de Jong, Vice President and Chief Market Leader for Philips. They're all joining us. We're talking about infrastructure in Africa. We're talking about innovative solutions for financing the infrastructure gap. And on that note, I'd just like to throw to Opio. Tell us about the ARM Infrastructure Fund. I mean, what is the target fund size, the geographies you're targeting, and I suppose Nigeria is the base that you're starting from.
Sure. It's a $250 million fund. That's the first fund. Of course, in the future, we will intend to raise further funds as well. Geographically, our focus is West Africa, albeit with a predominant focus on Nigeria. And the target sectors cover transport, its assets, seaports, airports, roads, bridges, etc. Energy, which includes power generation and distribution, it includes oil and gas, things like pipelines, gas processing plants. And utilities, which cover telecoms, water, both clean wastewater distribution and so on and so forth.
And your background is in water?
Yes, I spent nearly 17 years in the global water industry. Did some power and then a lot of roads, especially in the last 7 years in Nigeria.
So let's talk about the power privatization process in Nigeria, because last week was a very important deadline when it comes to providing that 25% of the value of the bids for all the preferred bidders. So you're one of the investors in a power plant here. Tell us about your project specifically.
Sure. We are a co-sponsor of the Azura Edo IPP project. That's a $700 million, 450 megawatt power generation plant we're constructing very near the city, which is in the southern eastern part of Nigeria. The 450 megawatts is phase 1, phase 2, which will be in a few years' time, will be about another 450 megawatts. We're on track to a financial close of that, probably in December or early Q1 of next year. That's a very interesting one because the Azura Edo IPP is today the only one that has so far signed a power purchase agreement with the Nigerian bulk energy trader. And of course, all of those issues around counterparty risk and creditworthiness of the bulk energy trader are very, very important. But I'm pleased to also report that a number of other credit enhancements are there, including a partial risk guarantee being provided by the World Bank, MEGA's PRI cover as well, and a novel put and call option that will cover us in certain termination scenarios and put certain obligations on the federal government of Nigeria. So this is it's a market-leading transaction. We believe that it's setting the template in many, many ways. This is also encouraging further developments, more in the NIPP space. Of course, the ongoing privatizations of the generation companies and the distribution companies. Projects like ours in Azura will supplement that. But ultimately, I will go back and say that it's not just about the generation on the one hand, or the distribution. It's that bit in between. It's a transmission system that is the route by which you evacuate power and ultimately put it in the hands of the end user. At the moment, Nigeria is way behind in that space. It needs so much more new investment. So there are no doubts risks in this space. The market is not settled yet. I don't personally believe that for the long term they're going to need all these enhancements. But the market needs time to stabilize, and the sort of pioneering projects like Azura need to have that support to give the confidence to continue to invest.
You bring up the very critical aspect of energy, and it's, as we keep saying, it's about the entire value chain, transmission being a missing link right now. Is that an area that UBA Capital is looking to mobilize funds for?
Well, in Nigeria, typically with transmission, it tends to stay within government control. When you have the unbundling of the power sector, like it's being done in Nigeria, what you find is that in Nigeria, government is privatizing 17 entities, 6 generation companies and 11 distribution companies. But the transmission is going to be under government control, but under a management contract. So they brought in Manitoba Hydro of Canada to improve the management and manage the investment, capital expenditure, getting the transmission infrastructure to a level where it's capable of wheeling all this new power that you're going to generate. So, but a transmission company can also raise funds. One of the things we do at UBA Capital is to help our clients raise money from the capital markets. So you could have a transmission company that goes to the capital markets to issue long-term securities, to raise bonds, to support its investment requirements. And the good thing about infrastructure, particularly with bonds, that's the best way of financing infrastructure because you're able to mobilize pools of long-term capital, typically pension funds, look to invest in infrastructure through capital markets, securities, or investing in companies that are listed. For instance, if you look at the National Grid in the UK, that's actually a listed company and it has shareholders. And so that's another way in which you can invest in your transmission by actually listing that entity that's responsible. It may be a partial listing where a government still retains a stake within that transmission company because it's considered a national asset and strategic infrastructure that you can't just give to anybody. But we're involved in all aspects of raising those funds.
I mean, you bring up the very important aspect when it comes to Africa, the capital markets here. So Andrew, your perspective on the development of West Africa's capital markets to help support infrastructure financing. Firstly, I suppose on the bond side of things, there's been a lot of development and a lot of reforms specifically for pension funds to help enable that. But are we going far enough?
Well, I think that it's very important that infrastructure is actually financed as much as possible in the local market. At the end of the day, people pay for their infrastructure, whether it's their electricity bills or their tolls or whatever it may be, in local currency. And if you finance that entirely with foreign currency, as is the trend today, then you're running a big currency mismatch risk, which, if the local currency should collapse for one reason or the other, could cause problems, with the financing. So developing local capital markets is important, and a lot has been done to develop the local bond market here in Nigeria and in other parts of the continent as well. But unfortunately, it's still not at the point where it can provide a lot of funding for these projects. First of all, the interest rate structure is too high to allow for the financing of infrastructure. That has to do with, for example, how much the governments are borrowing and crowding out the private sector, inflation rates, although those are coming down in Nigeria right now, etc. Also, the tenors that are available tend not to be very long. Generally speaking, most issues for non-government would be 5, maybe 7 years. And again, to finance a power station, you need at least 10-year money and ideally something closer to 15-year money. So there's some way to go, but that doesn't mean that you shouldn't.
The pension fund money is there though. I mean, speaking to just Sanlam in South Africa, they say they're scouring the continent for long-term investment projects.
The pension fund money is there, but a lot of the projects are greenfield projects, and the sort of risk profile that pension funds are looking for doesn't really suit investing in greenfield projects where you've got a lot of construction risk, startup risk, etc. They're really looking for projects which have gone over the hump, as it were, and are in a more steady state. And there are fewer of those available. And I see the role of pension funds as, I see a sort of chain where you have bank funding and maybe offshore funding, financing the greenfield projects through the construction phase. And then once they're up and running, I see the pension funds refinancing those into local currency, and then sort of releasing the initial money to be recycled into into developing and financing new projects. I think there are a couple of things that are very important to mention. One was something that Opio alluded to. If you notice, the project that he mentioned, Azura, has 3 levels of support. There's the partial risk guarantee, there's the put and call option, and then there's the political risk insurance. Now, as he said, for sort of pioneering projects, maybe you need this kind of level of protection. But for, in the long term, it's just not sustainable. Governments are supporting $93 billion of investment a year, or 98, or whatever the number is. They cannot afford to take that risk entirely onto their balance sheet, which is effectively what a lot of these mechanisms do. So, it also needs to be built in a way that these projects become sustaining and take the risk without needing this level of government support. If that doesn't happen, then we're not really going to get very far. Now, there are examples. Kenya, KPLC, which is the power company there, is actually considered quite bankable, and
listed.
And is listed and is partially owned as well, actually, by the government and the private sector. And it's considered quite bankable. Most projects there get a letter of support from the government, but don't need all these belts and braces that Opio was describing. And I think it's very important that both the private sector and government and financiers work towards this end. Because if we keep on, it's very easy to just ask for the governments to guarantee these things. But if we keep on doing that, then
can
we're
also
not
be
really...
looking better.
Exactly.
Yeah. One last comment from you, Pure, because you're going to have to leave us. But I just want to find out, what's the next investment from the infrastructure fund? What can you look forward to?
Well, we're working on various things, entirely across the range that we mentioned. We're looking at toll roads right now. We're looking at
in Nigeria.
Yeah, in Nigeria. We're looking at airports. There's power both in Nigeria and out of Nigeria as well. We're looking at utilities. You mentioned my water background. No matter how much I forget about it, it always comes back. We're looking at that both in Nigeria and out of Nigeria. I think the prognosis is very exciting. But, as Andrew was also alluding, I think the critical thing is putting projects in such a way that we don't need belts and braces. We need stability in the system. I think, Ronald, you talked at one point in time about political stability. And in one recent survey I was looking at, when you look at the risks that concern investors most, the highest on the list was political risk. It's not unique to Africa. I mean, we see the same thing in Europe. We had issues with pricing of alternative energy, I think wind farms in probably Norway earlier this year. That caused all sorts of ripples. But importantly, is investors like, as far as they can get, it's certainty. Certainty can be wishful thinking, but as close as you can, you want to get that. You also want to know that you will only take on board risks that you can either eliminate, manage, or at least mitigate to a reasonable extent. But we cannot have a situation where working with a private sector party, and I mentioned before about the risk of politicization, that you don't allow what I call expedient decisions to now derail what has already been done. I mean, people have taken a lot of time, invested money, and if there is uncertainty in the market simply will not grow. But there's a huge demand for infrastructure in Africa, and that demand must and needs to be filled. So many novel ways. In fact, even the capital markets that was discussed, it goes beyond just raising finance. For investors in infrastructure, they typically want to come in for a period of time, take it through the risk phase like Andrew described over the hump, and then they want to be able to exit and realizing some value. Today, there isn't really a secondary market for such assets. And that's where, for example, in Nigeria, the NSC recently set up the alternative investment market, pretty much like IM in the United Kingdom. That should, in the medium to long term, provide some kind of secondary market for people wanting to exit. If they can't find a way to exit, particularly foreign investors, they won't come in. Mm-hmm. I think the final point I have to say is, in terms of the cost of financing, it is cripplingly high in Nigeria and in most other African territories. That really is the key reason why you end up bringing in foreign investment. Besides the cost, it's also about the knowledge. And the thing about development is very, very important. Well, equity funds don't really want to get involved in development, but I can tell you that these days we do that, because sometimes you have to come at a stage where you can help shape the deal to make it truly bankable. That's
To
something
get
that,
to the point that it's ready for you.
absolutely, and that's what exactly we're doing in the Zero. We're actually putting in development capital. And what we're finding is that investors are actually now understanding that in Africa you need to do that. But I think the crux of the matter, where development is concerned, is that there really is a dearth of the right skills and experience amongst, if you like, the local indigenous population to handle projects like this. And as a consequence, there's too much of a bias on the offshore skills and experience. So again, we need to find a mechanism that says, while all these projects are being done, Africans also can learn and play a part. That way, in the long term, as Andrew postulated, we will find that local investors will then be able to sustain the market. Until then, we are stuck at the moment with having to manage this hybrid.
Well, thanks, of course, for tuning in for the Philips African Dialogues brought to you from Lagos, Nigeria.